Welcome to the first lecture in this lecture series on the Principles of Insurance IC01 course of the Insurance Institute of India. In this lecture, we will be dealing with a portion of the first chapter titled Risk Management. We will cover the concepts of peril, risks, and hazards in this lecture. Types of risks and that of hazards will be addressed in the next lecture. First, let us deal with perils. What is a peril? Peril is any event or incident that causes loss. Anything that causes loss is a peril. Examples are flood, fire, earthquake, lightning, riots, strikes, etc. Perils need not only be natural but can be man-made causes such as riots, wars, etc. It need not even be weather related or third party related. For example, take the case of medical insurance, which makes good the medical expenses that may be incurred for treating a fracture in the hand owing to slipping in the bathroom. So, what is the relationship between peril and insurance? Insurance does not protect the asset or prevent its loss due to the peril. Insurance simply tries to reduce the impact of financial loss caused by the peril to the owner or beneficiary of the asset. For example, by subscribing to a fire insurance policy, fire accidents cannot be prevented. If fire accidents occur causing losses, insurance can simply address such losses by putting the person in the same position that was before the peril of fire occurred. Similarly, insurance addresses only the financial or economic loss and cannot compensate non-economic losses such as loss of love and affection of the family, sentimental attachments, etc., because they are not quantifiable in terms of money. Next, we deal with the concept of risk. Risk is uncertainty of outcome. If perils can cause damage to an asset, the asset is exposed to the risk. In fact, broadly, if there is a chance that outcome will be different from expectations, there is a risk. So, risks are likelihood of loss or damage resulting from the occurrence of perils. To give an illustration, if an asset, say a building, is exposed to fire accidents, we say that there is a risk of the peril of fire. Note that it is possible that the peril might have occurred, but though no damage might have been caused. Fire might have occurred, for instance, in a building without causing any loss. In these cases, insurance has no role to play since there was no loss. Risks may change in situations. Some assets are exposed to more risks than the others. For example, an old building is more exposed to risks as compared to a new one from the perspective of the perils of fire, earthquake, flood, etc. So is the case of tanker lorries carrying hazardous materials. The risk involved in carrying hazardous materials is more than the risk involved in carrying non-hazardous material like say water. So where there is possibility of loss, there is risk. Insurance is obtained where there is a possibility of loss. Here, possibility refers to uncertainty. So, insurance covers a situation where there is uncertainty and not when occurrence of loss is certain. To give a simple example, health insurance will not be given to a person who suffers from fatal disease like AIDS, etc., where death is virtually certain. Now, we come to the last concept to be dealt with in this lecture, hazard. What is hazard? Hazard is a condition or a situation that creates or increases the chance of loss. it accelerates the peril. To give an example, in an explosives factory, use of explosives will result in a more rapid spreading of fire in a very short time. Therefore, use of explosives is a hazard. Insurers may charge heavy premium for insurance of hazardous risks or at times may even refuse to insure a risk which is hazardous in nature. Even when they charge heavy premium, they may require certain conditions to be fulfilled so as to reduce the impact of the hazard. For example, in an explosives factory, in order to insure against losses caused due to fire, insurers may insist upon installation of smoke detectors, water sprinklers, fire alarms, emergency exits, etc. as condition for providing fire insurance. We will deal with the types of risks and the type of hazards in the next lecture. Bye bye and stay safe.